Well, for more, I'm joined now by Peter Andersen of Andersen Capital Management. Peter, hello. The AI bubble seems to get ever bigger then, but could it pop in 2025?
This AI bubble indeed is getting very large, larger than I ever expected, and I am very concerned going into the future just how much more spending can support this bubble. At some point, I do think somebody will say there's enough spending going on. That, but also think how difficult it is to project the future even a year from now. Yet Broadcom has gone out 3 years. That seems exceptional, especially in such a speculative industry such as AI.
Would you buy chip makers at these valuations, Peter?
I have stayed away from most chip makers except for Nvidia. And as you know, I've been a big fan of Nvidia since 2015. But in reality, this year in the summer, I actually started trimming that back even because I thought things were just getting too pricey. And the enthusiasm for artificial intelligence has exceeded our wildest expectations. And that has caused me great concern about the valuations.
More broadly, I know you're positive about the outlook for 2025 despite the very high valuations that we see across the market. Why is that?
I think the stage has been set with the new administration coming in to be extremely favorable on almost all industries. The deregulatory environment that he has hinted at, and also the great support for capital markets in general, has set the stage for what I believe is a time that I haven't seen in my investment career. I know that is a very large expectation, but all signs are pointing to tremendous support as we go into 2025 for the capital markets.
Is there a risk, though, that further deregulation could create bubbles that then pop?
Of course, there's always the potential for bubbles, and we always have to be very vigilant. So I would indeed expect bubbles, but I would also expect opportunities that have not presented themselves in many years, even in healthcare, for instance, which has not really been in the headlines right now. That's an area where we think has the most promise, and areas I would stay away from. I'm predicting this next year will be a very, very high title in the headlines, will be quantum computing. You should strap in and expect a lot of hype on that. And I think that is an industry that we have to be extremely careful about before we actually take investments in it.
On the Fed front, Peter, you said in your notes that it shouldn't cut any further. Markets have it baked in to cut next week. Do you think that would be a bad idea?
When we look at the markets, remember, when they do have it baked in, sometimes we think of that as an oracle from outside our own operating sphere. But in reality, it's just ourselves, right, speculating on what we think is going to happen. So I don't spend too much time on those predictive markets. Instead, I use common sense, and I think about the economy right now and the change in administration and what I think is going to be quite a large change. So if I were on the Fed board right now, I think I would put a pause until we got a clearer sense of the direction that these policies are going to point us in, which would be in, at the earliest, late January. So I still think that the Fed was not correct in lowering rates last month, and I think the Fed will still be incorrect in lowering rates this month.
Does that mean that going into 2025, you think that far fewer cuts than the market generally expects will be warranted?
Absolutely. Another thing I'm worried about beside quantum computing is the fact that if we do have tremendous growth, then there will be, of course, inflation, and that might cause the Fed to do a complete 180 degrees. And instead of worrying about cutting, they might actually have to start thinking about raising rates again. And of course, markets don't like rates when they're on the increase. And that is a potential weak point in this rather optimistic outlook I have for 2025.
Peter Andersen of Andersen Capital Management, thank you so much for joining us.